welcome back to my channel for another video. So double dipping Sambora is back. Okay, this is how versatile my strategy is and how I approach the market. So this is actually two different trades on two different instruments. So first of all, I started off with DAX. Okay, so that's the German equivalent of the Dow Jones or the FTSE 100. So I take about 271 on that, and then I switch over and take a FTSE trade, the FTSE 100, and I take 400 odd pounds. So all in all, it's about just over £700, two different instruments. But again, it demonstrates that there's diversification that you must implement. Okay, you have to be diverse. I've said it before, diversification is the key to success. Okay, so guys, I hope that you enjoyed this week's video. Again, make sure that you smash that like button. Make sure that you subscribe to my channel for more videos like this. And if you want to contact me, you can contact me on my Instagram, that's sambora.00. I have a website. The link to the website is in my bio. So again, double dipping Sambora. I hope you like this week's video. Okay, so here we go, guys. So that blue line, that's my entry. So I took this position literally a minute into the open, so I've been holding it for a couple of minutes now. So this is the DAX. So this is the German equivalent to the FTSE 100 or the Dow Jones. So here we go, look at that. Again, my approach to the market has to be diverse. It has to be. So this is a pretty quick trade. You know, I'm in this position for about three or 4 minutes. So not a great deal of time. I usually hold position for anywhere from 5 minutes. So look at that. I'm just going to take that now. 271. Yep, I'll take that. And then I'm back in again, this time with the FTSE 100. Again, I closed my DAX position, opened up the FTSE 100, had a look to see what was happening. And it's the same thing again, guys. It's the same approach. My approach is diverse. My strategy is diverse. I literally opened up the FTSE 100, had a look to see what it was doing, identify the characteristics that I would identify with my entries, and I entered my position. Yes, I entered it a little bit too early, and the spread was also quite wide as well. The spread usually is quite wide on the FTSE 100 with my broker, so I always expect that in anyway. But it's this old saying, I've been saying it for a long time now, what goes up must come down. After the rally, there has to be a pullback. After the sell-off, there has to be a recovery. And that's what I've seen here. That is what I've seen. And you know, I'll comfortably hold this now. Comfortably hold this because I know that this has to come down. I can't just keep shooting for the stars. I cannot keep shooting for the stars. It's just impossible. This is not how the stock market works. It has to come back down. And that's my confidence in my strategy. That's the confidence that I have in the strategy, is that I'm prepared to hold that. You know, £700 down. I did sweat a little bit. It's not very often that I'm £700 down, I can assure you. Normally I'd have pulled the plug on it. Why did I not pull the plug, you're asking yourself? Quite simple. I held that because of this massive rally. Because after such a massive rally, I know, from looking at the stock market for almost 2 years now, I know that after such a rally, there has to be a pullback. There simply has to be. It cannot keep going up. At some point, it has to come back down. And I created that space by my entry. So I created that space by my entry, and I knew that it would come down, and I held it. I held it, and look at the size of the rejection on that very top green candle. The rejection is massive. It's absolutely massive. And again, you know, this is another one of them things that, you know, I look at and it just gives me clarification. It gives me clarification to hold these positions. And even though I was trying to go bullish there, it's been rejected, I'm still happy to hold this again. Why am I happy to hold it? Because look at that rally. That rally is a very big rally. It has to come back down. It simply has to come back down. That's why I was happy to hold this for such a long time. And again, you know, I've said it before, you know, when you've spent so many months, or in my case years now, in the stock market, you just get to know what's going to happen. Yes, sometimes you're wrong, sometimes you are wrong, of course you are. But occasions like this, when I've seen such a massive rally, I knew it was a sure thing that it would have to come down. The only question was when. So I had to hold this for a little bit. You know, I don't normally hold positions for quite this amount of time. It's not normally how my strategy works. But I have said, you've got to be diverse. You've got to be diverse. You've got to be flexible. You've got to have this approach to the market. You know, you cannot be one-minded. But again, guys, you know what, I'm not changing my strategy. I'm not changing the patterns that I identify. I'm just being a little bit more diverse in terms of the instruments that I'm choosing. All right, and again, you know, £400 down, still happy to hold because I know this has to come crashing down. It has to. History's told me that this will come back down. And again, it's just through months and months and months just looking at these charts, and you get to know what's going to happen. And you know, it was a long trade for me, this one. Quite a long trade, but it has to fall. It simply has to fall. But at the same time, you know, I'm not going to expect it to drop all the way back down to where it was. You know, that would be foolish. So, you know, it'll only go down to a certain point, and when I see that it's starting to be rejected at the support levels consistently, you know, not periodically but consistently, that's when I'll pull the plug, take my profit and walk away. But at the moment I can still see that it's trying to push down through them support levels. And there you go, look at that. So I will take that. Thank you very much. There you have it, guys, double dip on Sambora. You know, these are the kind of strategies, you know, that you implement over time. You know, you can switch from one instrument to the other, you know, using the exact same strategy. So, you know, you're trading two separate instruments, two completely separate instruments, and you can use the exact same strategy. My patterns and my strategies work, you know, on all futures, i.e. the FTSE, the DAX and the Dow Jones. So again, it's just it's another demonstration of the versatility that is in my approach. You know, and again, you know, I see that my students, you know, are being more diverse as well. They're enhancing and diversifying their own portfolios as well. And this is the stage that you get to where you start to diversify your approach using the exact same strategy. Okay, don't mistake that we're swapping and changing strategies here. It's the exact same strategy. My strategy is the exact same for all the instruments, but we can swap it down between the 2 or 3 different instruments. You know, I literally have the ability, and my students have the ability, to trade the DAX, the FTSE and the Dow Jones in the first half an hour, three separate instruments if we wish to do so. So again, I hope you enjoyed this week's video. Make sure that you smashed that like button. Make sure that you subscribe to my channel for more videos like this. And again, guys, if you want to contact me, you can contact me on my Instagram, that's sambora.00. If you want to find out more about what myself and my students do, you can have a look at my website. The link is in my bio. Have a good week.